And yeah, I see a lot of empty space here. Please fill this place. What? Yes. Yes. Wait. Okay, we are starting the session, and my colleague Vidya will take over from here.
A very good morning to a very good morning to everyone here. I'm Vidya Sagapam from Clean Energy Access Network. It is my honor to welcome you all to this session on India-Africa Development Partnership for Distributed Renewable Energy (DRE), from policy collaboration to on-ground impact. I would like to call up on stage our moderator, Mr. Thomas Polenkov, advisor to the Village Empowerment Inc. Next, I would like to call up the speakers. Mr. Dilip Singh, National Project Manager, UNDP India. Next, I'd like to call up Mr. Shreyamsa Bairikanjan, CEO of Energy Ventures. Next, I'd like to call up Mr. Barakat Ahmed from Regional Programs Head Africa, International Solar Alliance. Next, I'd like to call up Ms. Mukabanji Mutanuka, Country Coordinator, Sustainable Energy for All, SE for All, Zambia. Next, I'd like to call up Prashant Motwani, Country Director of India, Odyssey Energy Solutions. Can I please request all the panelists to please stand together for a group photo? Yeah. So Mr. Olu Oruke, Country Director, Husk Power Systems, Nigeria, will be joining us online. Can we please put him up on the screen, if possible? Okay, yeah. Thank you, sir. Thank you. Over to you, sir. Thomas.
Thank you, Vidya. So, good morning, everybody, and welcome to this session on India-Africa cooperation, development partnership for DRE is what they've called it, but I think I'll call it the India-Africa cooperation session because I see a lot of potential for India and Africa to work together. And I also believe that we are at a situation where Africa is at the cusp of an energy transition. Right now, it's an energy transition. It may or may not be a clean energy transition, but it's still an energy transition, and we are at the cusp of moving towards, Africa is at the cusp of moving towards, transiting from lack of modern energy sources to better electrification, better sources of energy. And I think there's also an appetite in Africa to move from, when the energy transition happens, to move from where they are right now to a clean energy transition. And I think that's where this session is, we are aiming at. Africa, I think, is no longer in a mood for conferences and events and studies that is normally dished out to Africa by a lot of the development partners. I think Africa is in a mood for implementation. Africa is in a mood for, putting your money where your mouth is, rather than just going ahead and, doing studies for them and feasibility studies and, countrywide evaluations and things of that sort. And I think that's where, and that's what should be of interest to the clean members. I also believe that India is at a stage in its energy transition where we are moving from, energy access to, for lighting and mobile phones, which is where a lot of, at least my experience in the sector has been, to moving into where energy can bring about some sort of resilience, some sort of, economic improvement. And I think also simultaneously what is happening in India, especially for a lot of the small DRE players, is that our businesses are becoming less and less relevant in India. So I think we are at this situation where Indian enterprises need to look at new markets, and Africa being a new market. And I think Africa is in a situation where they want to look at, people who can come with solutions, people who have lived the problem. They're not looking at cheap products. So if we as a country, we as a industry believe that Africa is looking for cheap products, let me tell you, you're already, outclassed. There are much better people who can give much cheaper products. But what they cannot bring to Africa, what they cannot, and what is our USP as a country, is the fact that we are coming in with the experience of having delivered these solutions to rural areas. We've got a very credible history of saying that, okay, we've moved a few million people into, from unelectrified to electrified. We have solutions that can actually change economic situations within countries, can build resilience in countries. And I think that's the solution that India can offer to Africa. Now, I have with me an excellent panel. Okay, most of the panelists here have some sort of experience. Of course, people who are from the continent itself. We've got 2 speakers from the continent, and I think they are the ones who are going to give us the, the best possible insights. But we also have people who have worked in the continent, who are actively working in the continent. And I think that, that would be that once we listen to them, we should be able to sort of, at the end of the session and in, the following days, we should be able to chart out a way that India and Africa can start working together. And I think if Clean can be that organization that can, create that, what do you call it, the platform for where African industries and African organizations and African countries are going to be working with the Indian industry, Indian organizations, Indian governments, I think that would be a great thing. I'll start off with questions for the panelists, but before I start off with the questions for the panelists, a quick introduction about myself. I'm Thomas Pulankav. I work with Village Empowerment. Village Empowerment is an organization that is implementing the global SDG 7 hubs in Africa. We have got 2 hubs, one in Ethiopia and one in Tanzania. The idea is that as an organization, this is a partnership between Village Empowerment and Selco Foundation. And as an organization, we intend to take some of the learnings that the Selco Foundation has as an organization in India to Africa and say, okay, here are our learnings, here is that what we've learned, now tweak it and use it for your own country. And that's my background. As we go through the speakers, I'll ask each of them to introduce themselves so that they can talk a little bit about what they do and what they, what the work that they do as an organization. And I think I'd initially planned the session in such a way that we would have people from the continent talking to us. Then we would have the people who are the facilitators, the people in the industry, and then we would have the ones that we're looking most forward to, the UNDP and ISA, who would be able to conclude, so that we could take the whole path from one end to, logically from one end to the other. But I also believe that Barakat is running a little short on time. So I might be, start off with revising the. So can I just pass down the mic to the speakers here and just a quick introduction about themselves and what the work that they do, and then I'll come back to the questions. Thank you.
I think they already introduced us, but anyways, good morning, everybody. I'm so fortunate to be here, and thanks to Clean for giving us this platform. But yeah, I work with UNDP India, United Nations Development Program in India, and we work mostly with decentralized renewable energy systems, where we are working in the implementation support with the Clean partners. We have done these programs, but also we have worked along with ISA. We have developed a program where we are implementing solar irrigation pumps for agriculture use in 9 African countries and one Pacific island. So we have got that experience as well. But yeah, so we'll be talking more about that later. But yes, thanks.
Yeah, good morning, everyone. Thanks for Clean for organizing such a very good platform to exchange knowledge and sharing experience from the continent side, and how really we can take forward this partnership between India and Africa. I am Barakat Ahmed. I am heading the Africa program at the International Solar Alliance. And somehow I have a lot of experience in Africa. Before joining ISA, I was working with the African Development Bank as a consultant. And before that also, I worked with the African Union Commission. So I came with some experience from the Africa market and the challenge that they are facing in the energy sector. So lovely to be here and sharing knowledge with you. Thank you.
Good morning, everybody. Muka Mtanuka is my name. I'm coming in from Lusaka, Zambia. So out of context, Sustainable Energy for All works with governments, private sector, civil society to fast track SDG 7. And particularly for Zambia, we're working with the presidency, the government of Zambia, to achieve the presidential ambition to electrify 1,000 communities. That we're doing through a collaborative approach with Rockefeller Foundation and the Global Energy Alliance for People and Planet. It's a pleasure to be here. Thank you, Clean, for the invitation.
Yeah, good morning, everyone. I'm Shreyans Bariganjan. I'm with the Energy Ventures. Thanks to Clean and Thomas for having us here on this panel. So Energy Ventures is a fund advisory and a fund which essentially looks at supporting clean tech, again, across the entire ecosystem, not just in India, but in the global south as well. As a quick background, before taking over this role at Energy, I was with the World Bank for a while as a senior specialist and a lead working actively in African portfolios as well as the SIDS portfolio. Thank you.
Good morning, everyone. My name is Prashant Motwani. I am the country director for Odyssey Energy Solutions. Very pleased to be here, and thank you, Clean, for inviting me to the panel. Congratulations for organizing this event. At Odyssey Energy Solutions, we help deploy capital in the distributed renewable energy ecosystem across the world. We are a procurement platform with strategic tie-ups with OEMs across the world. Africa is our largest market, and through our capital provider partners, we also help channelize funds into the DRE ecosystem across the world. I look forward to sharing my views during the panel discussion. Thank you.
We have Olu online. So Olu, can you also quickly introduce yourself?
Right, thank you. And I don't know if you can hear me, but please confirm you can hear me.
We can hear you.
Right, okay. Good morning, everyone from Nigeria. I work with a company called Horsepower Systems, and we build, own, and operate hybrid mini grids in India and Nigeria. Those are the two, of course, our largest mini grid markets in Nigeria, and a pleasure to be joining you guys online to speak to this very, very crucial topic of how India and Africa are, collaborating and partnering to scale clean energy. And congrats to Clean for also organizing this and for the invitation. Thank you.
Thank you, Olu. So as I said, I think I'll start with Barakat because of the time constraints that he has. So Barakat, I ideally wanted to ask you this question because then, a lot of the answers would have already been given by the other participants. But considering that it's ISA's mandate to take solar-powered solutions to every corner of Africa, to all your member countries, from your perspective, from ISA's perspective, what are the strategies and partnerships that are most crucial to achieving this ambition on the ground?
Thank you so much, Thomas. So, I will be very practical. And as you mentioned, Africa in a mood of implementation, all the African countries, they are really looking for implementation. They have enough conferences, advocacy, reports, and all of these. So in order to scale solar energy in Africa, there are three things have to move together: policy, finance, and local capacity. This is a combination. It must be there so to ensure the scalability based on our experience. And so if there is no policy, no private sector will come. If there is no local capacity, sustainability is not there. And if there is no finance, of course, there is no project implementation. So this is the approach that International Solar Alliance adopt for supporting its member countries. ISA, International Solar Organization, is one intergovernmental organization, 126 member countries, so it's the largest organization when it comes to the South-South collaboration. So let's take it one by one. When we are talking about policy, how we are supporting our member countries to adopt the right policy and regulation to attract private sector. First of all, you need to adopt policy which is aligned with the national priorities to ensure the political support and de-risk the implementation risk. So we start with a solar roadmap with our member countries to identify the gaps, the bottlenecks, and where ISA can intervene and support. Secondly, some member countries also, they have some gaps, for example, in rooftop, in mini-grid, in agriculture. So you have the policy and regulation should be aligned with the country priorities. So policy and regulation, this is the first aspect that the countries should work on to be able to attract private sector. Finance, I think everybody continue to say that the finance is a big challenge for African countries, and it has been a challenge. And it will continue unless we have a bankable project. So that's why also when we are talking about innovation, innovation is not only about technology. Innovation also include business model, include financing infrastructure also. That's why when we are talking about the partnership between India and Africa. So my recommendation to the Indian private sector, not only to look to the technology perspective, but they have also to think about the business model. We are struggling with the business model. We are struggling with the financing structure. So this also should be part of the package that the India will be offering to Africa. Secondly, third point is the local capacity and the ecosystem. Technology by itself will not deliver impact. You have to improve the skills. You have to have the right skills, the qualified people, and the institution as well. So one of our intervention, and we have one flagship project which we call Solar Application Resource Technology Center, is STAR-C, and we have installed, I think, 10 STAR-C in African countries, and we have 17 over all the globe, and we are having a huge request from all our member countries to set up a STAR-C, which address the capacity building, address testing, standardization, and also incubation and supporting young people as well. So policy, finance, and the local capacity, three items that are very crucial to be able to scale solar and build partnership.
Thank you, Barakat. In fact, I'll continue with the question to you. You were speaking about how it's different the South-South cooperation between India and Africa is structurally different, and it's from the traditional donor-led models. And if you could also explain what are the advantages of this approach, and if you can also tell us how ISA can actually work with the Indian enterprises here. We have Indian enterprises who are working in the DRE sector. We have platforms like Clean who can, work towards this co-creation of solutions for Africa. So if you can, tell us in these two areas, what are your thoughts?
So first of all, the biggest difference in the South-South cooperation, as you mentioned, it's a problem-driven, not funding-driven. And in the India-Africa context, cooperation starts from shared development realities. If we look back 15 or 20 years back to India, India has to use experience the same challenge that the African continent they are facing and still facing in terms of energy access, affordability, grid constraint, and also climate vulnerability. These are the challenges that India has succeeded to overcome during the last 15, 20 years. So what is really good here? What is the best advantage for Africa? So Indian solar journey offers a solution that has been tested already. So the African countries, they need to take this solution, either business model, either policy and regulation, either finance structure, even technology, even the capacity also, and customize this solution to the country condition. So this is really the beauty and how Africa and India, they have similar condition. Not only, by the way, in technology or the solar, but also in terms of culture. Africa and India, they have a long history of culture together. So this is kind of South-South cooperation. And so ISA, as a neutral platform, can connect this strength between India and Africa. And Clean like platform like Clean bringing innovation and manufacturers also can work with ISA. We are aggregating the demand, bringing the need of the countries, and India have the capacity to do that. So we can work together, and I think we have already doing this. We are partnering with Silco Foundation, one of the partnership that I am personally proud of. We are taking the experience of Silco Foundation in building the capacity of the community in Ethiopia, in Uganda, in Rwanda, in Tanzania as well. So this is a good example of partnership. We are also partnering with Silco, with the Self-Employment Women Association, taking their experience also to build the community in Ghana. We are also working to connect the private sector from India with the African countries like NTPC, like OMC Power, all of this. So this kind of partnership that we need to come together, think about innovative solution. And maybe also we need to take one step forward. Such kind of gathering, maybe we should think about have it in Africa. We shouldn't really continue talking among ourselves here in India. We should go to Africa and listen to their needs, their challenges, and we discuss with them how we can together bridge this partnership.
Thank you, Barakat. I could ask you a lot more questions, but there are other panelists, and I also know that if you're still around after I've spoken to the other panelists, I'll ask you more. But I think I totally agree with Barakat saying, like, my first impression when I went to Africa is that Africa is where India was 20 years back. And as a country, as Clean as an organization, as a platform, has the potential for reducing that learning gap. Africa does not need the 20 years to learn because we've learned our lessons. And if we can transmit those lessons from India to Africa so that their learning curve is significantly reduced, they are very quickly able to achieve what India has been able to achieve in 20 years, I think that can be the biggest contribution that India can do to Africa as a continent. Okay, now going back to the participants from the continent, Mukha, my first set of questions will be to you. From your experience of having worked in Africa, and I'm also asking you to dip back on your previous experience before your SE for All experience, where I know you were very active in the mini grids space in Zambia. how would you assess the current state of energy access today, especially in terms of its impact on livelihoods?
Okay. Before this, I used to be a developer in my past life. And obviously, the narrative is the same in Zambia and much of sub-Saharan Africa, in that there's an evolution from small-scale tier one kind level of access to access that actually speeds to unlocking of productivity, but also livelihood improvement. So with this kind of shift from just having a light that shows you how much impoverished you are to having energy that actually can drive income generation, productivity, that means that it comes with a lot of innovation, disruptive thinking. How disruptive are you in terms of your business model? How disruptive are you in terms of how you structure the finance? Is the finance speaking to the peculiarities of doing business on the ground, especially for the off-grid sector? Because you'd find that the traditional RBF models actually speak to certain parameters that cannot be changed, and the fact that you're targeting bottom of pyramid customers who have seasonality of incomes, a lot of problems, it means that that thinking has to change. But also the fact that you're already looking at SDG 7, it means that your target is agrarian, rural communities, and poor communities. And the fact that you're going to talk about universal access means that you cannot go alone. The silo approach will not work. So a cohesive and collaborative approach, a partnership approach, is definitely a transition through which you could actually achieve this universal access. Otherwise, it will just be a dream, and we'll continue talking 10 years after this.
Muka, to continue with you, if we are talking of disruptive thinking in Zambia, which you said is the need of the hour, what do you think would be the most binding constraints among policy, financing, demand simulation, execution capacity? What is the most important thing when it comes to doing it in practice?
I think we cannot talk about those things in isolation. DRE is a machine with so many moving pieces at the same time. So if you talk about policy, my colleague Barakat here spoke about policy frameworks. There could be some policy quite all right, but is the policy well streamlined to incentivize private capital flows? That's a question that you need to ask, because without political will, no part of the world has been electrified without strong political will. So the political will you see in the regulatory space. For finances as well, how well structured is it to reflect the ground realities of actually implementation? On paper, it looks very good, but when you get on the ground, things get different. So no financier is going to put in money into a market where the regulatory landscape is not really stable. So already that's an issue. The execution capacity, I think over time we've seen that in Africa, slowly but surely, the local capacity is improving, but obviously not at the pace at which India has improved. But the biggest thing of all of this is you could have the right political will, you could have the funding element, you could have the team to execute. But then if you do not have a guaranteed revenue mechanism that will ensure that there's proper usage of the electricity that you're providing, then obviously that's the biggest problem. So the biggest problem here is demand stimulation. And for that, allow me to just speak about one of the clean members. I know there's no specific clean arm or branch in Africa, but I'll speak about one clean member, which is Customized Energy Solutions, which has actually taken up all of those things to bring together different ecosystem actors, because in Africa you have to be an ecosystem driver. They're bringing together ecosystem actors to understand what exactly do we need to change in the spectrum to be able to work with this machine that has so many moving pieces at the same time. So demand stimulation is key. Productive uses has been thought of as an afterthought and not integrated into the design. So that mindset shift will not happen overnight, but if we have a tangible example to show, it means that we can position ourselves for global financing requirements that need a proper shape and pathway of how to get to acceleration.
Thank you, Muka. I was also going to ask you what is that, the Indian enterprises should learn before entering Africa, but I think you have sort of covered that in your response. Olu, coming to you, I think your Huspower is a unique case where you have scaled operations both in India and in Africa. And my first question to you would be, how do business models differ across these geographies? And what are the factors that drive these differences?
And that's a very good question. Thank you so much. But to be honest, technically, and I say technically from system kind of perspective, from the kind of systems perspective, there's not much of a difference. It's like you're just taking similar systems and adapting them, on the technical basis. But I think I've heard quite a few things around getting on the ground. But when you get on the ground, then it becomes different because sociocultural norms now have to influence the kind of business models you have to, drive on the ground. And those are the basic differences, to be honest, because what we are or what we're doing is a service-based business. You could call it a retail service, or you even call it rural service. Now you're dealing with people, they've already been described by a previous speaker on the panel, who are living in agrarian areas, who are living in totally off-grid communities with very bad roads, and whose priorities vary, right? So you have to, first of all, understand where and how power plays a key role in their lives and what they use it for. And then you begin to adapt your business model to fit that. Again, for Husk, it's been very, very great. For us, we do not think of, and Muka already said that, a lot of companies always think productive use is an afterthought or bring it in later. But we're always going with productive use because if you look at it, there's already productive use existing in these areas. And what you're trying to do is maybe shift for some convenience. But India, 15, 20 years ago used to be different and used to be the off-grid capital of the world. So we've adapted quite a few lessons from the initial journey in India to what we are now doing in Nigeria and also scaling across Africa. However, local knowledge, local context, social cultural norms, how people react, and Africa is very, very huge. Even in Nigeria, not one community is the same as the next. So when you get in there, you are adapting your model to fit what those social cultural norms are saying. The systems, when you see them are all the same. You can deploy 50 kilowatt system from village to village, but how people will accept and use that power will always vary. And then that is where the relationships, the customer insights, the behavioral aspects then come into play, into molding what the model will look like. And essentially, those are just the key differences. But the good thing is when you look at India and Nigeria or Africa, demographics are almost the same. So adaptation is also quite easy. And, the factors I already mentioned, like local contexts, even language, even religion and things like that, you have to take those into consideration. Do people pray 5 times a day? What does it mean? How do they use power when they are fasting? Do they, if they are agrarian, what kind of crops do they farm? Cash crops or whatever, if not cash crops, crops for subsistence? And how do you support all that? So that is how essentially those are the little factors that essentially shape the different business models from community to community and maybe from country to country as well.
Thank you, Olu. If I can just ask you to elaborate further on that. When in the case of Husk Power, what were the lessons from India that you were able to take in directly without too much of modification? And what are the things that you had to adapt to suit the local conditions in Nigeria? If you can also highlight how programs like the Nigeria's DRES program has been able to influence the commercial viability of what you're doing, that would shed a lot of insight for people here who are looking at countries like Nigeria to expand to.
I think, and a very great question. So the DRES, I'll start from the DRES program, which is a World Bank program. It's the second phase of an initial program, essentially to drive, renewable energy scale up. $750 million pot, helping to de-risk capital or private capital that comes into Nigeria by way of mini grids. we were the first company to prove that mini grids could be profitable, and not a lot of companies have done that, essentially, because of obvious reasons. Now, the DRES program is designed to help companies de-risk whatever capital inflows are coming into the country, and that's where there's a difference, because it gives you like a demand side subsidy and supports Nigeria's quest as trying to reverse an energy access deficit of having the world's largest off-grid population. Over 80 million Nigerians have never seen power from any grid, and that is the largest of any country in the world as we speak today. India used to be in that. And we took that title, unfortunately, from India a few years ago. India used to be the world's largest off-grid capital. Now, what HUSK is doing is also saying India's journey, essentially, where India has been from being the world's largest off-grid capital to Nigeria's been taking on that mantle. What were the things done? And what we are seeing is, I already mentioned behavior and how people are adapting to power first coming to their villages and all of that stuff. And what you would look at is, in terms of models, is in India's case, I don't think, to the best of my knowledge, there was that public sector financing as the World Bank DRES program. But in Nigeria's case, there is, because Nigeria is now in a race against time until 2030 to ensure that all those 80 million people living without reliable power from any grid get onto the grid. So Nigeria is now in a case chasing two things, in my view: energy access for people living off grid, who are already using diesel generators, by the way. Nigeria is also huge on diesel generators. And then the energy transition, to also ensure that while we're giving you access to reliable power from a grid, which is now the mini grid, we're also helping you transit from using fossil fuels, which you're already using, or diesel generators, to now using clean energy. So, which is why that DRES program has been designed that way, to support, firstly, the access to power from the grid, and secondly, the transition away from fossil fuel use. I think those are the two differences that have happened between HUSK in India and HUSK in Nigeria. And what we've seen the grant program has helped us do is provide fuel to what we already are able to do. Our deployment capability as a company of being able to do maybe one every other day in India, we are now able to also almost replicate the same thing in Nigeria, because that capital inflow that is also coming in is being able to be de-risked by the DRES program. And just to add finally, Nigeria has also borrowed a few things in policy from India directly. So it's also, but adapted to local context, of course. And those things have helped a company like ours leverage the understanding of a similar market with similar demographics to move quickly in Nigeria. Thank you.
Thank you, Olu. I hope you're around till the end of the session, because I'm sure many of the CLEAN members, if they're looking at expansion into the African continent, would have a lot more of questions to ask you when we open up the questions to the audience. Prashant, what I've been hearing from Olu and to some extent from the others is that de-risking of capital seems to be a big issue, because Olu repeatedly said, one of the biggest challenges is, and one of the advantages that the DRES program was able to provide to him was the de-risking of capital. So in India also, we are aware that financing is often the biggest barrier for DRE scale. And considering the fact that as a country, we have a much more robust financing system, in spite of that, DRE enterprises have always had challenges with financing. Can you please tell us how equipment credit facilities or other innovative financing instruments work in the space of pure in Africa? You can also sort of go back to linking it to your India experience and talk about how it happens in India and what could we take to Africa from here.
Okay, so first of all, why equipment credit facilities exist? is because a lot of traditional lenders don't find bankability in the projects that they are supporting. I think we've seen that come in various shapes, and the same theme coming in various forms, that there is an asset performance risk, there is an execution risk, there is some form of the risk in financing, but eventually it impacts the bankability of the project. How equipment credit is different from traditional financing is that it essentially helps the developer or the solar company address the working capital gap. And beyond that, it doesn't rely on heavy collateral as a lot of other traditional financing does. It works as the underlying inventory as the collateral. But the reason why it, or not the reason, but the primary premise it relies on is the efficiency of the procurement ecosystem, of the supply chain ecosystem, where they have a lot of visibility into when the equipment is getting delivered, how soon it can get delivered, what quality of equipment is getting delivered. So drawing a contrast between India and Africa, let's say 2 data points. One is just in solar modules. We have 100 gigawatt of installed capacity in the country today. That gives developers, financiers, procurement platforms like ours a lot of visibility into the reliability and timeliness of equipment supply. On the other hand, we've seen India-Africa trade, which crossed about $100 billion last year. But the trade of renewable energy, green equipment between India and Africa is limited. Now, which means that in the African continent, there is a lot of reliance on a concentrated set of limited number of vendors, supply chain partners, which, as I go back to my opening comment, which impacts bankability of these projects. And that, I think, is one unaddressed area which can scale, which needs a lot of efficiencies, is a wide trade efficient corridor between India and Africa, where a lot of equipment, a lot of supply chain support can, not just goods, a lot of supply chain expertise that needs to be exchanged between India and Africa, and these procurement ecosystems with pre-vetted vendors, with procurement platforms, with digitized supply chains, better monitoring, transparency, equipment standards need to develop in that continent for the partnership to scale and for the ecosystem in Africa to scale up.
Thank you, Prashant. If I can just go further on that, if the financiers in Africa, the banks and the other financial institutions in Africa, have to participate in the African DRE market, what do you think needs to be in place for them? And you also spoke about digitized supply chains. If you can sort of elaborate on how India's strength as a digital leader in the digital economy can actually be innovatively applied to address the challenges within Africa that doesn't exist right now.
So to your first question, which is around what needs to happen for these financiers to participate, I think the mindset has to move, and the investments that these financiers are making in Africa have to, over a period of time, transition to take the form of commercial capital. Because when commercial capital enters, it also incentivizes both the lender and the asset owner or the borrower or the beneficiary into bringing efficiencies. And that is something that drives the entire ecosystem forward, that helps everyone look at each step of the supply chain and then bring efficiencies there. Connecting that to India, I think we've seen a lot of digital initiatives. The flagship one being digital public infrastructure that has happened in India, the IoT systems that are being used, which in the DRE ecosystem translate into remote monitoring and control systems. Now, if, let's say, a financier who has supported a project, whether commercially or productive use or through an RBF program, what the capital provider is looking for is a robust monitoring system to be made aware that the plant asset, the asset performance is not getting impacted because some sensor or some fuse or some small component in the whole system is malfunctioning. And I think a lot of these digital tools can be used to monitor these assets, not just by the asset owner, but also by the capital providers to make the capital deployment more efficient.
Thank you, Prashant. Shrey, coming to you, you heard Muka very clearly mentioning, saying that there's an ecosystem approach that is required for the African market rather than a product supply approach. Now, as an investor and as an ecosystem builder, Energiva, okay. Energiva, as an ecosystem and investor and ecosystem builder, where do you see the strongest alignment between the Indian DRE solutions providers who are members of Clean and the African markets needs?
Well, thanks, Thomas. That's a great question. So, again, I mean, when we look at the African market, there are quite a few economies, again, I mean, which are a part of the continent, right? So there are a few things that we need to look at when we get started with the basics. Essentially, we are looking at the DRE sector as a growth utility instead of just looking at this market as a supply market, right? So at the end of the day, if you have productive anchor loads, if you have MSME support, if you have clean cooling support, all of that needs to get plugged into this ecosystem. And there are enough examples globally of how that translates into the African market. So that piece needs to be taken care of. Then when we are talking about policy landscape across different African countries, again, I mean, when we are looking at investments, it needs to be synergized to a point where people have a better understanding of the efforts that are being taken up by a lot of the African countries to kind of get investors in. In terms of the financing stack, I mean, there are three stacks of financing that we talk about typically. The first stack is philanthropy, which is there to fail, right? So at the end of the day, if there are big bets or big swings to be taken, that's essentially what philanthropy's role is. So if you go in with philanthropic capital and it fails, that's absolutely fine. Slightly connected to that is the stack on funding a lot of startups which need to kind of be built up in the ecosystem so that the TRL 4 to 7 gap is also addressed, right? I mean, supporting them through that valley of death for a lot of startups also becomes very, very critical. But immediately on top of that, the second stack of capital is the public sector financing that comes in. And when we are talking about the World Banks, the African Development Banks, they also work very closely with the government. I mean, Nigeria has some great examples to showcase. I mean, given the DRE fund, the DRE Nigeria fund, which was set up with a 500 million outlay, right? So that's a clear indication that they're looking at that to open up the markets. And the final stack is the private sector who needs to come in. So unless the private sector comes in, the sector is not going to be sustainable. And this, again, is an example that we have seen primarily in India, given the kind of ecosystem development work that we have seen. I'll also quickly touch upon the de-risking point. So a lot of work that I did in Africa while I was with the World Bank was looking at how do we de-risk, because eventually if the private sector investment doesn't come in, the sector is not sustainable, as I said. So can we look at guarantees, could be first loss, could be partial loss, as a clustered approach to kind of engage a lot of ecosystem companies to come in, so that tomorrow, if they're not getting their payments, there is a guarantee to backstop them. I mean, they're not shutting shop. Escrows, I mean, again, a very structural tool, but that needs to be used more effectively. Payment security mechanism, looking at 6-month delays and all of that to kind of backstop some of these payments. I mean, that also helps. And the final point I would make on that is the currency convertibility. So usually there's a lot of volatility. And when we want investors from other countries, be it India or any other part of the world, to come in and invest in Africa, the currency volatility needs to be looked at. And the way to look at that, again, through the efforts of SE for All and a lot of others, to anchor this either with a MDB or anybody else to cover the cost of that hedging. So once that is happening, I mean, we'll see a lot more investments also flow in.
Yeah, I think everybody in the Indian industry, DRE industry, would totally agree with the fact that India's DRE progress has been driven by the strong ecosystem that exists in India, whether it is policy, whether it's finance, whether it's the civil society, whether it's the technological innovation that happened in India. For most of us in India, it's a given. We did not have to create the financing, for solar energy, or did not have to create the financing for DRE to be made possible because the financial sector existed. We did not have to go for manufacturing in India because the manufacturing sector was pretty robust in India. Similarly, with innovation, there were a lot of, potential for people to innovate in India. And if we look at the success of the DRE sector in India, and I think one of the things that the DRE sector from India can take to Africa is the fact that they are able to recognize the policy gaps, the ecosystem gaps that existed. Now, my question to you would be, what ecosystem gaps could meaningfully reduce the risks for Indian companies to be able to go there? And I'm specifically asking you this because under the Village Empowerment's goal, we have a goal of working on creating ecosystems in the countries where we are operating. And it would be good to also understand your views on what is that in the ecosystem are gaps that you think the Indian enterprises or Indian organizations like IDRES or the Village Empowerment, who I represent, can actually come in and fill that space.
Sure. So I think the critical role that policy plays in any of this is in signaling, right? So at the end of the day, policy is an enabler to invite other ecosystem partners to come in and take up that critical role. And I think that's exactly what we have seen in the case of India. That's also something that needs to happen in Africa. But consistency, and I'm not, again, the African continent is a large continent, so I'm not saying that policy consistency can happen across all the countries at the same time. But even if you have a cluster of 10 countries which align on a certain policy to bring in private sector investments, that itself is a big signaling in this space. For example, when we talk about the DRE market, I mean, there are a lot of lessons to learn from the Indian market as well, right? So we had DRE installations coming up back in the day without a visibility of how do they plug into the main grids and all of that. Africa has the opportunity to talk about a grid to a hybrid kind of mapping, right? So looking at policy indications to enable that, I think is going to open up the markets for private sector and other players to come in. That's just one of the pieces that we are going to look at. Enabling policy to invite the kind of skill sector that is required for servicing the DRE markets. That also is a critical piece, right? And it's a big piece. When we look at India, India is a densely populated country, so a DRE solution in a village makes quick sense. But when we are talking about Africa, again, given the dispersed nature of the various countries, where do you have accessibility to look at the monitoring, evaluation, all of those pieces? So that again comes in through the skilling council and all those kind of engagements, right? So policy indication basically as a form of signaling is something that should enable the other sector players to come in.
Just add on to that question, I'm not letting you go. If organizations like Village Empowerment and IDRES have to do specific activities which will enable it or make it easier for organizations who are members of CLEAN to come into those countries, could you name one or two things that we should be looking at immediately?
Barkat just moved, but one of the discussions that we are having with ISA is to kind of, or even SE for All when Damilola was here, was to look at a Mission 300 plan, particularly looking at the 50 million that Africa Development Bank is supposed to support, and how can we come in and look at that small segment as a market signaling, essentially through SE for All in the countries that they're working in. Similarly, with ISA, we are in discussion to come in and partner on the Africa Solar Facility to projectize a lot of efforts. And I think, again, I mean, Village Empowerment and CLEAN has a critical role in that ecosystem development because they have already done that and they have seen a lot of that development happen over here. So that essentially is a great plug to go also come in.
Thank you, Shri. Dilip, coming to you. Okay, we've been hearing about, what is the role that organizations can play. And I think organizations like ISA and UNDP have a significant role in playing being the organizations that are going to facilitate what Shri just mentioned as taking learnings from here, replicating it here. Now, based on, I just forgot the name of the program that you had mentioned where you're working across 10 countries. Now, my question would be, what would it take to replicate and adapt a DRE program for livelihoods from one region to another, especially based on your experience of working across 10 different countries?
This one or that? Okay, so yeah, so I think various speakers before me have, and you also have kind of, alluded to it, that to replicate India's experience or what we have done here, the key things would be like policy, regulatory support, or the environment, ecosystem that needs to be there, and capacity. So this is something that we also learned or realized when we were implementing the IBS. This is the IBSA facility, 10-country program that I'm talking about, where we are working in 9 African countries for irrigation, solarizing the irrigation pumps. So one of the first lessons that we learned is that the approach has to be tailored. I mean, take into context the national context, take into consideration the national context, the nuanced and tailored technical assistance. It cannot be like one size fits all. So when I say national context, it involves all this ecosystem, the policy, the kind of capacities that they have, the kind of political situations there, regulatory things and all. And secondly, I think also the South-South cooperation, where it's quite important, where you take learnings from different countries which are having similar kind of development challenges, but some, like India has, as you said, 20 years of experience of this thing. So how do we take these, learnings, what we have, to the countries where like in Africa? So UNDP is doing that, where we take lessons from the solar pumping programs in India, and what kind of approaches would be better suited to that. Now, in addition to the IBSA 10-country, that's like one solar, pumping program. In India itself, we have kind of implemented a large DRE-based livelihood program, where we kind of implemented about 450, different end-use products, productive use of energy across several states. So the key lessons from this, from this implementation program was that the DRE, it needs to be paired with, at the local level, for local level impact, it needs to be paired with skill building, it needs to be paired with market ecosystem development, or it needs to start with, say, mapping the whole livelihood value chain. Those kind of, small measures need to be put in place so that the impacts are better. So these are the lessons that we could easily take to the African countries where, we want to kind of do that. Yeah.
I'm just going to put you a little bit on the spot. In the current situation where, grants are dying out, and Africa being one of those continents that are significantly suffering from the change in the quote-unquote grant thinking of many of the large donors, my question, you can say no to if you don't want to answer this. My question would be to, what would you think that, UNDP as an organization, or what can, the India's DRE sector do to go beyond grant-based support? I'm specifically looking at where financing is made available through either through blended finance or guarantees or risk-sharing instruments. What do you think we can do so that we can move further away and make the lack of donor money less risky, or the reducing amount of donor money less risky for the African countries?
I actually don't have to answer that. I mean, because Shreya and others, they've already answered pretty elaborately on how the different kinds of financing mechanisms. Yeah, I mean, this is something that UNDP is already experimenting in Africa. So we have a large Africa mini-grid program, I guess you would have heard it. So this is where we are working in 21 African countries, and which actually brings in together the, uses the public finance at a which is at less, so to kind of use that to de-risk the private equity and the other kinds of finances which are available to de-risk this thing. So this is actually what UNDP is doing in African countries, to bring various stakeholders together and bring all the different kinds of financing possible.
Thank you. One last question. Now that I have to also, do something for Clean, they've after all invited me and put me on the stage here. So tell me, what is that UNDP can do so that organizations like Clean, platforms like Clean, can become an effective implementation and ecosystem partner for the India-Africa DRE cooperation?
Okay. So we have already, I mean, the 450 systems that we installed, implemented here in India, it was done all with clean members. So I'm very proud to say that, and very happy that the results are astonishing and the impacts are good. So I was talking to Nitin, and there is like a lot of ground level impact, and a lot of new entrepreneurs are taking it up, and also these kind of, so UNDP could act as a aggregator, or in UNDP has offices in all these countries, in all the African countries. So we can actually provide that kind of platform there, where we can actually bring various players together, various stakeholders together in various countries to come and then plan for and then develop programs like the Africa Mini Grid program that was done for especially. But Africa Mini Grid is for mini grids. We could actually now do it for DRE, for distributed renewable energy based for livelihoods. Similarly, Clean actually can bring in, we can support or we can help together with Clean to bring in its experience of innovative delivery models, the kind of capacity building things that they are doing. So this is where UNDP brings in. UNDP can also support on delivery models, or UNDP and Clean can together do that in African sense. Yeah.
I was hoping he would say that I'll put in $1 million into Clean this year to be able to do that, but he's been diplomatically playing the. I know that we are running short on time. I was told that there are only 10 minutes, and I think I've consumed some of that. I'd like to ask just one question for all the panelists to respond quickly, one after the other. What is one concrete pilot or partnership or transaction that we can do between India and Africa in the next 12 months? Just one idea you think that is workable, is doable, and we should be doing it as part of the cooperation between the two countries. I'll start with you, Olu, if I'm audible to you, and then come on to the other speakers on the dais.
Right. So a very good question. I think the reason for why we are all here is that collaboration and partnership, right? We've already said it, and I think one of the speakers also echoed it. In trying to bring power to locations in Africa or Nigeria firstly, because it's the largest off-grid location in the world, you have to look at what that power can do for people. And what can that power do? It is to build thriving economies for people. And how would that happen? That would happen through supporting people with equipment, machinery. You could call it machinery. You could call it with technical skills that can help them be self-sufficient and contribute to GDP growth or economic growth. And that's when the power availability or the power that we bring makes sense. And that's where collaboration can come in. We still have a fragmented productive use equipment, if I could call it that, kind of ecosystem. And we need to find a way to help that ecosystem on productive use of equipment or productive use equipment become less fragmented and key into the reliable power that mini grids provide. So that kind of partnership, I'm sure India has already scaled on that. I know CES is doing some great work, has done some great work in Zambia, is looking to do a lot of work with us in Nigeria. But unfragmenting, if I could use that word, that's PUE kind of subspace in what we're doing would make more meaning in what we're doing with providing reliable power to upgrade rural communities across Africa and drive thriving rural economies and ensure economic growth and GDP growth and all of that stuff happens across the continent. Thank you.
Thank you, Olu. Prashant, if you can respond, and then just if you can come down the line too, back to Dilip. Thanks.
I think one big initiative could be creating a green gateway to Africa, a two-way channel between India and Africa, which will not just encompass trade, but also transfer of expertise, sharing of ideas at policy level, at on-ground expertise, project development, capital, everything. So that green gateway to Africa would be my one big idea.
Thanks. We are, in fact, starting to support some of that work through, say, the Access program that WRI and other partners are doing. So would look to evolve that and also engage more deeply. We are in the process of an Indo-Africa mapping with our counterparts in Africa to see which are the investable opportunities, which are the ideas that need to be mainstreamed. But again, the effort is to co-create, not kind of go in with a solution-based mindset. And that's exactly also what I said when I said we are working closely with SE for All, we are working closely with ISA to understand what are the critical engagement opportunities. But it's mostly around projectization. So that's something that's ongoing as we speak.
Thanks. For me, I see a lot of diversity in the membership base of CLEAN. And out of that, I think CLEAN can go a step further, out of just being a networking platform to being a technical and transactional bridge between India and Africa. Because I know bilateral engagements are happening between some of the CLEAN members in different African countries. But if that can be well structured so that we can pick on some lessons, leverage on that to be able to kick mark. But one example I typically have, which I think I forgot to speak about, is the deliberateness in the government and also in some of the membership to actually speed track women-led entrepreneurship within off-grid areas. I think the learning from that could actually be a game changer because women bear the face of energy poverty much more severely than men. Thank you.
Okay, so I was also going to say that what I've heard or what I've learned is that there are multiple countries, multiple agencies actually working in Africa for the similar kind of outcomes. And I think there is a time where what earlier said that there's a green gateway or something like that, or a platform or something which can be a common. All the agencies come together. So that is something that we should aim for in the next 12 months to bring everybody on to the same platform and then work towards a similar. So India and Africa country program could be developed. Yeah.
If there are questions from the audience for the panelists, I think we'll have time for a couple of questions. Rekha, we'll start with you. Is somebody going to be distributing the mics to them?
Thank you. So just two questions. One is there any experience? I've heard that there's a thriving industry associations in Africa. What are the lessons from there for CLEAN? What can we do differently to support the industry here and also in Africa? And the second is lessons from programs like DRES. I know World Bank is not going to come here and do a DRE program, but can we learn from the DRES program and co-design some programs? CLEAN is looking to design a finance facilitation program. So what are the lessons from programs like that in Africa?
Srinivas, you had a question?
A suggestion in a way, many UN agencies have this data and information on their interventions with the DRE. Whether you can align with CLEAN, which is considered an impartial body, to be a repository, a dashboard for this data and the documentation. Thank you.
Hey, are you taking all the questions together, or?
We'll take your question and then we'll have people answer it.
Okay, hi. Yeah, this is Sharath, also from CLEAN. I have two questions. One for Prashant. Prashant, the focus on the asset-based financing, when you said. Now, my question is, supposing a purchaser kind of bails out in the sense he's not able to make his payments, part of it. Now, so how do you address that part of it? One side is on the insurance part, and the second part is what actually happens to the asset post that, The second question is for Shriyam sir. Can you throw some light on the countries that you're planning to focus on in Africa? And secondly, just want to understand from you, the emphasis of your organization will be more primarily on the government side of things or on ground people side of things? Thank you.
Can we have Muka and Olu, if both of you could respond to the first set of questions, if you could respond to Srinivas's question, and then respectively to what Sharath had asked.
Okay, so I think the first question was asking about the learnings from the different funding programs. I'll speak specifically to Zambia. So most of the programs that you would have from the EU, be it the World Bank, be it Nordic financing, would actually come in as partial capex subsidization. So what that means is that the developer would have to go out there and look for matching financing, either as equity or concessions or guarantees. Transactional costs to get to financial close are very high. The time required to get to financial close is a very long time. So you find that the rate of implementation is very slowed down. And obviously, if we're looking at the time frame that we have, this is a business as usual approach to not get us to the commitments of 2030. Then I think the other lesson that you asked was regarding the industry associations. So I know Africa is at different stages in terms of where this energy access theme is. Obviously, you can't compare Nigeria and Zambia, but obviously there could be some similarities. So for countries in the lesser sub-Saharan, you'll find that DRE is a nascent activity. And it being nascent, it means that we have to make a lot of mistakes along the way. But the opportunity that this gives us is that we do not have to break a leg to know how painful it is. We could learn from you. So I think I'll leave it at that. Olu, over to you.
Okay, thank you. So I'll also speak to, the program before the DRES program, which was the Nigeria Electrification Project, or performance-based grants, which then led to DRES. And the success from there came from the, intentionality of, and a lot of iterations as well. We didn't get it right from the first beginning. I think the initial amount was around $350 for every new connection. We moved it to almost $600, and then being able to attract players. That program actually helped attract players like Husk. But the success story in Nigeria for such financing program has come from policy and regulatory actors being very intentional, working the work. Nigeria has now iterated quite a bit on its mini-grid policies, and is now also going to a place where subnationals are able to decide their own fates with how they generate, transmit, and distribute power to their people. I think, that was the question on DRES and how it would help. So essentially, DRES has been designed as a program, like I said, to help de-risk private sector financing. If you want to structure any financing in similar way, I think you can look to that, how that program has been structured as an RBF to help de-risk any commercial capital coming into the space. And in terms of industry associations, look, Nigeria is also really nascent. I think even in terms of mini grids, East Africa took a leap before Nigeria, but what usually happens is because of the sheer size of the opportunity in Nigeria, it looks like Nigeria is now in the lead. But actually, East Africa started the whole mini-grid journey, even with the African Mini-Grid Developers Association and all of that. But the roles that associations play in Africa is, and I've seen it, is way different from the roles that associations play in India. And, there's a lot of lessons that associations like AMDA, which I already mentioned, have to learn from what is happening in India. But I think the synergy between such associations, maybe MOUs, agreements, shared learnings is what both of us, or both associations on both continents or both divides can learn from, i.e. AMDA with local knowledge and local membership, and CLEAN with technology and ecosystem, understanding. I'll leave it at that. Thank you.
Okay, so Srinivas. Yeah, so Srinivas and I go long back, and then, so this is one of the things that we have banged our heads about, that we do lots of implementation, we support a lot of implementation on ground, but we don't have the data as to what is happening after that. So, as in all the 450 systems that we are supporting to install, all the 450 systems have RMS. We have actually provided to have a remote monitoring system on each one of them. So we are aware, and then we want to, as we go ahead, as we go forward, we would definitely have this kind of, collection of information and data on what is happening with the DRE systems, how much it is working. And it also helps that if you have a remote monitoring system, because many of these systems are in remote areas, right? So as soon as you know that, or somebody like a clean member, because they are the holder of these information, so they would be alerted, and they can actually provide the timely whatever maintenance and service support or any other kind of support. So I think this is an important thing that we realized, and we are going forward. Srinivas will ensure that this is done. Yeah, thanks.
Thanks, Sharat, for that question. Okay, so we are not a financier, so we are a procurement platform, but I can share some experience around that, given the number of systems that we've seen. Now, non-payment generally boils down to, it's quite nuanced, but it boils down to two issues: on the supply side, on the demand side. Supply side, when the asset is not performing, there could be issues with monitoring, maintenance, performance of the asset, in which case, let's say if the operator has not performed the duties to maintain upkeep of the asset, it's usually, we've seen, like in India, you go for substitution of the operator and you hand over the asset to another operator. On the demand side, there could be an issue with either the off-taker's requirement has come down, or the off-taker's requirement continues as envisaged, but payments are not coming in from the off-taker. So in that case, you look at terminating the off-take contracts and then replace someone. If both don't work, supply side intervention, demand side intervention, then probably you could, the only option that, or one of the limited options that are left is to salvage the asset, where you work with the developer in salvaging and you find an alternate buyer and whatever value that can give. That, I think, is broadly a summary on three sides: supply, demand, and salvage. But the actual situation is quite nuanced. It varies from situation to situation, plant to plant, and you have to really work with the stakeholders involved there to work out a solution and ensure long-term sustainability of such assets.
Thanks. So Energyware is looking at a list of 10 countries to start our engagement in. Again, I mean, a lot of it is input from partners such as SE for All, the Africa Climate Foundation, and whosoever has been working. But again, I mean, we have a lot of the Francophone countries involved in that, but then we are looking at DRC, Senegal, Nigeria, and other countries as a part of that. But again, as a fund advisory, as a funder, we are very aligned to how the ecosystem of partners wants us to work. So at the end of the day, if the partner has presence in a country and it wants to start engaging there, then that's the priority that we take. That also goes to the second question that you had asked, particularly whether it's a government, it's an ecosystem. It's a broader ecosystem approach. We feel that buy-in from the government is critical, but it has to be aligned in terms of that direction that the government wants to take. But it is also that broader thriving ecosystem of organizations like Clean and others who can actually come in and pick up the thread in delivering programs. So that's what our priority is. So we are not limiting ourselves to saying that we'll only work with one subset or two subsets of ecosystem players. It's always driven by the partner.
I'm sorry, we don't have time for more questions. I've been told to wind up the session. What I don't like about these, tight sessions is that I don't get to deliver my, last 15 minutes of talk, which unfortunately you'll all miss, but it doesn't matter. I don't think I could have contributed more knowledge than what was already, given out from this dais here. So two things I think is very clear. I think the opportunity for an India-Africa cooperation exists, and it is up to the Indian industry and partners within organizations within India to be able to tap it in. And what is coming even more clearly is that a platform like Clean can help bridge that gap between the intent and the action. And I think we've heard from various sources, right from what Dilip said about the Clean becoming a repository of knowledge, to activities where they're looking for partnerships between Indian organizations, Clean members, and organizations in Africa. Two terms that really stuck to me one was the Africa Green Gateway and the technical transaction bridge. And that's both these are critical roles that an organization, a platform like Clean can play. So I think it was an enriching session, informative for everyone involved, including Clean. And I cannot thank the panelists enough, especially Olu. I think it's very, very early in the morning in Nigeria. Thank you so much for joining this panel and contributing your ideas. Thank you, Muka, for traveling all the way. India is not an easy country to access from the African continent. And to my other panelists on the stage, I think we should give them a good hand and also get them to promise that they are there for more questions if there are any in the field. So thank you all. Thank you so much. You've been a great audience. I see a lot of empty chairs, but the ones that were filled, I think, had a lot of interest. So thank you all very much.
Thank you, panelists, for this insightful session. And also, thank you so much, Thomas, sir, for moderating this session. I hope this session strengthens the India-Africa Development Partnership and accelerates concrete on-ground implementation of DRE that truly leave no one behind. May I now request Thomas, sir, to please felicitate the speakers. Mr. Dilip, can you please step forward? Mr. Shriyamsa. Ms. Mukabanji. Mr. Prashant Motwani. I would now like to felicitate Mr. Thomas, sir.
Do I get to take Barakas as well?
Oh, yeah.
Thank you, everybody, and thank you, Clean, for this very interesting session. I think we are breaking for tea after this.
Yeah, I now request everybody to please move to Charminar area for high tea. Also, please check out the exhibitors. We have around 40 exhibitors coming. And yeah, please be back here by 11:15. We have another interesting session. 11:45, sorry. We have another interesting session on streamlining finance for DRE. So please do come back. Yeah. Thank you.